All right, let's talk about cash. Not the money you're about to throw into the stock market. I'm talking about that idle cash. You know, the money sitting on the sidelines, maybe for an emergency or for a down payment or just waiting for the right moment. It's a problem we all face, and today we're going to break down a really smart solution.
So here's what we're going to cover. First, we'll nail down exactly what this idle cash problem is. Then we'll get right into it. What is a money market fund? After that, we'll look at its 3 core features, figure out who it's really best for, and wrap it all up with a really cool metaphor, your financial goalkeeper. Okay, first things first. Let's talk about a dilemma that literally every single one of us runs into. It's that tricky question of what to do with the cash you need to keep safe, but you also don't want it to just sit there gathering dust and losing value. So let me just ask you, straight up, where is your spare cash right now? Seriously, think about it. That emergency fund you've built up, or maybe that bonus you just got. Where is it? For a lot of us, the options feel, well, not great.
And this really boils it down to the classic financial puzzle. On one side, you've got your regular old bank savings account. Yeah, it feels safe, but let's be honest, inflation is slowly eating away at the buying power every single day. On the other side, you've got the stock market. Awesome for long-term growth, but, it can be a total roller coaster. It's not where you want to park cash you might need next month. So, you might be wondering, is there a middle ground? Is there some kind of safe harbor for cash that solves this problem? Yes, absolutely. And that brings us to our main event, the money market fund. It's a tool that was basically designed for this exact situation. So, what on earth is a money market fund? Think of it like a mutual fund, but instead of buying stocks that can swing up and down, its entire job is to buy super safe, high-quality, short-term debt. It really only has 3 goals. 1, keep your money safe. 2, make sure you can get it when you need it. And 3, earn you a little more than you'd get at a typical bank. That's it. Simple. Now, when I say high-quality, short-term debt, what does that actually mean? Well, we're talking about the boring stuff, which in this case is a very good thing. Think Treasury Bills, which are backed by the government and are considered one of the safest investments on the planet, or commercial paper from big, stable corporations. The key here is that all these things are short-term. They mature very, very quickly, and that's the secret sauce to their stability. All right, so now that we know what they are, let's get into what makes them so darn useful. Money market funds have what I like to call 3 financial superpowers. Let's dig into each one. First, and most important, is safety. Job number 1. Because these funds only invest in those super stable short-term things we just talked about, the risk of you losing your original investment is extremely low. Their entire structure is built to avoid the crazy swings of the stock market. This is all about preserving your capital. Let's talk about superpower number 2, and this one is a huge deal: high liquidity. Now, liquidity is just a fancy finance word for how fast you can get your hands on your cash when you need it. With these funds, there's no long lockup period. If you need your money, you can get to it. Simple as that. And it's fast. You'll often see this little code T+1. All that means is after you make the trade, the T, your money is usually available the very next business day, just 1 day later. Now, if you're talking about an emergency fund, that kind of speed and flexibility is absolutely crucial. And the third and final feature is stable returns. Now, let's be super clear here. A money market fund is not going to make you rich. That is not its job. Its goal is just to make your cash work a little bit harder for you than it would just sitting in a regular bank account while keeping everything safe. And this chart really tells the story. You can see that while the numbers change depending on what interest rates are doing, money market fund yields pretty much always tend to do better than what you're getting from the average savings account. It's a simple way to fight back against inflation just a little bit without taking on a bunch of risk. So we've covered the what and the why. Now let's get to the most important question. How could you actually use one of these in your own financial life? Let's look at a few of the smartest ways to put a money market fund to work. Here are 3 perfect scenarios. First, it is an amazing place for your emergency fund. It's safe, you can get to it quickly, and it earns you a little something. Second, think of it as a parking lot for cash when you're in between investments. Maybe you sold a stock and you're just waiting for a good time to get back in. An MMF keeps that cash safe and productive while you wait. And third, for businesses, it's a really smart way to manage cash you know you'll need soon, like for payroll or taxes. Okay, to wrap this all up, I want to leave you with one last big idea. If you remember just one thing from all this, I want it to be this metaphor. I want you to start thinking of a money market fund as the goalkeeper on your financial team, right? Its job isn't to be the star striker who's scoring all the goals. That's what your stocks are for. No, an MMF plays a totally different, but just as critical role. It plays defense. A goalkeeper's job is to defend the net. It protects your capital from getting hit when you don't expect it. It gives you that stability and that peace of mind so that the rest of your team, your entire portfolio, can go on offense without you having to worry that your goal is wide open. It's your financial foundation.
And that leads me to my last question for you. Take a hard look at your own finances, your own plan. You probably have some strikers and midfielders, your stocks and your bonds, but do you have a goalkeeper? Do you have a solid plan to defend your cash, to give you that stability and liquidity no matter what the market is doing? It's definitely something worth thinking about. Thanks for tuning in.